and gentlemen, welcome back to a shit show sandwich. Okay, in today's episode, we're going to be going over everything you need to know about this market and probably things you don't need to know. Because you really need to know what's coming next, what's happening. Okay, and sorry to say for those that, don't like this channel, but we were correct yet again. We've been early to discuss some of the leading indicators of why small caps and AI stocks have been selling off. We've talked about the government shutdown that is making investors nervous. And a lot of you guys have understood that, but some have not. Some of the people that do not like this channel or the bears say, nope, it's just the stocks that you invest in that are selling off. Well, today, you can clearly see, it's obvious, front page news for everyone, that the government shutdown is now starting to impact markets in a much bigger way, with all of your indexes down over 1%, VIX that is skyrocketing yet again, fears of a recession that are blasting everywhere. We'll go over those headlines, my thoughts around this. No, I don't think we're going to have a recession, but do I understand why Wall Street is nervous? Putting on my Wall Street glasses? Yes. It's the context about this that you really need to know. So we're going to go over all your breaking news. What's happening today in markets? Get ready for a shit show sandwich update. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you want to come join the trading community where we are breaking these things down as they happen. Pretty valuable stuff over there. But with that said, let's go ahead and get started. Okay, now let's talk about what's happening in the broader markets today. The entire market is selling off. Bitcoin as well, down about 5%. And look at some of this carnage you are starting to see in Bitcoin. Bitcoin hit an all-time high of $126,244 today. It is $101,000. Bitcoin has fallen. What is this? And I'm just picking on Bitcoin here to prove a point. Bitcoin has fallen 20%. So a lot of people that point out single stocks and say, oh, that stock sucks. You know who you are. That says, that stock sucks because the rest of the markets are doing fine. And just like completely disregard the other, whole small cap arena, AI, mid caps that have gotten absolutely crushed in the last month or two. Look at Bitcoin, down almost 20% in like the last month. So if you're feeling red in your portfolio, unless you're in Mag 7 or S&P index funds, you've come under some pressure. Don't beat yourself up. It's not just one stock versus the next stock. It is everything that has been declining. Talked about the reason for this decline in some of the prior videos. The reason for this decline is actually very simple. Wall Street is getting concerned about the government shutdown. Okay, that's what is happening today. Now, I posted this in the trading community today, this morning at 7:08 a.m. I said, this was a direct headline that came out. The Congressional Budget Office estimates that the ongoing federal government shutdown could remove $7 to $14 billion from the U.S. economy, reducing fourth quarter GDP by as much as 2% due to halted government spending. Okay. We've been talking about this for the past couple of days. And by the way, if you want to come join the trading community, that link, again, is down below in the description of this video. It's the place to be in moments like this. Okay. But we've talked about this for a while now. And there's been some pushback from some of you guys that have said, stocks don't care about the government being shut down, blah-de-da-de-da. That's not true. Okay. Especially this time around. because we are about to be in the longest government shutdown ever. We're kind of in uncharted territory. Normally, government shutdowns are pretty fast and they get resolved. But from a Wall Street perspective, we didn't head into this government shutdown with the economy doing well. From Wall Street's perspective, we don't have a lot of a cushion, right? Economically speaking, labor market was declining, like we were having negative jobs reports, and then you slap the government shutdown on top of that, and it's making Wall Street get very nervous. You've seen the nervousness really building in markets for a while now, okay? This is what I've talked about. That's why you've seen small caps, quantum, AI, biopharmas, like anything that is remotely risky has been selling off, whereas Mag 7 has been doing very well. And there was a lot of pushback on what I said yesterday, that if we have a recession, the only place you'd really want to be is the Mag 7. Obviously, you'd rather be in cash or bonds, because bond prices are going to go up, yields are going to plummet if we go into a recession. That's obvious. But if you had to be in stocks, any stocks out there, the Mag 7 is likely to do better than everything else. Better than healthcare, I would imagine, right? Because AI is not going anywhere. Let's be honest. And Mag 7 has the most reliable, predictable, stable business models. They're not going anywhere. Okay? So people have been selling the small caps, buying Mag 7. If you're a hedge fund or institution and you think the economy is really weak right now, labor market's really weak, and now we have a government shutdown that could push us into a recession, it makes a lot of sense why Wall Street is selling small caps, selling risk on, and buying safety, right? I don't believe that. I don't think the economy is super strong right now, but I also don't think it's super weak either. I think we're largely unchanged. Now, government shutdown is a negative. It's having a negative impact. But here's the fact, and this is what Wall Street is going to miss. We don't go into recessions anymore in this country. It just really doesn't happen unless you have a massive shock event, right? Which, yes, government shutdown, some people are not getting paid. Presumably, they're going to get back pay eventually, okay? But the U.S. economy is so big and so diversified and not reliant on one industry that it's really hard to get enough industries at once to slump into a recession to give you a larger kind of broad economic recession. We've been in a rolling recession for 5 years, guys. 4 years, something like that. It was semiconductors, it was real estate, it was, and a little bit more now, it's like higher end items, okay? We've been in a rolling recession. My thought process is next year, you're going to start to see a recovery. Why? Because inflation kind of ended in a way in 2023. Like, things went really crazy in 2021 and 2022 as far as prices going up. But by about mid-2023, that rate of increase had really started to slow down. Like rent, everything had really started to slow down. So for the past 2 years now, roughly, people have slowly been able to catch back up again. And what I mean by that is when you have inflation like we did, not even looking at the government numbers, but, just everything that goes up, car insurance, for an example, that goes up $200-$300 a month, or a year, whatever the number is, it takes a while for your wage to catch up and where you're actually positive on wage growth. Well, you're about 2 years later is when you start to see a recovery begin, where people can start to make more, the price of items stops, going crazy, and you can generally start to recover. It's not a very fast process, though. So if you don't understand these things, like Wall Street doesn't, a lot of these Wall Street guys don't know their left hand from their right hand, they're going to miss the consumer recovery. And at a certain point, when things are presumably as bad as they are, and have been as bad as they are, the only way to go is up. From a simple, simple logic. And I think that's what we're heading into in 2026. I think partially the big beautiful bill is going to be really stimulative. No tax on tips, no tax on overtime. That's up to $25,000. No tax on overtime's like $14,000. So if you max out on $25,000 worth of tips at a 20% tax rate, you're going to be saving $5,000 a year. Now, I know a portion of that's going to be, still going to be taxed, like state and, Social Security, Medicaid, all of that. But you're probably going to save like $2,000 in federal taxes just on that, let alone overtime if you qualify for that as well. People are going to be getting thousands of dollars extra back on their tax return by mid-2026. But what I think is also really overlooked is real estate. Real estate's going to start to move. People, like, even if you're myself, I bought a home in 2021, okay, in March, right before prices went crazy. I got a mortgage on that home at the time for about $500. It was about a $100,000 house. I live in Michigan. Houses were dirt cheap then relative to like other states. Now, the house is worth $200,000 or more. The mortgages went up to about $800 a month. But if I wanted to buy that same house today at $200,000, it would be an over $2,000 mortgage payment. Even if like I could afford that and I can afford to buy a new house, do I really want to trade an $800 mortgage for a $2,000 mortgage and pay a higher, price? Like, I'm buying, essentially at that point, the meme stock that just went up 100%. I don't necessarily want to do that and have a mortgage that's almost 3 times as expensive, even if I can afford it. So what a lot of people have been forced to do is they're not able to buy or sell their home. People do have a lot of equity in their homes, though. So as mortgage rates come down, people can sell their home. They're going to start taking a lot of money to the bank. I've calculated hundreds of billions of dollars could be coming back to families next year alone, just in the form of home equity being converted to cash in your bank account when people sell their homes. So I don't buy into the narrative that we're heading into a recession. But I see why Wall Street is concerned by this. What we need at this point is the government to reopen. Now, if the government were to reopen tomorrow, which there are some rumors the government could reopen on Wednesday or Thursday, you might see a situation where stocks do really well. Stocks recover a lot, problem over. Or you're going to see a situation where you get a bit of a recovery, but then Wall Street wants to see how the economy is. They want to see how the data performs. And honestly, I don't know which direction we would take. Also in the news today, job openings in October slumped to the lowest level since early February, Indeed measure shows. It says employment opportunities hit their lowest level in more than 4.5 years as October came to a close and the government shutdown dragged on, according to data from job site Indeed. Indeed's dashboard of directors also has shown a decline in salary offerings as job advertisements have declined. You can see today the Dow is down 0.62%, S&P is down 1.08%, NASDAQ down 1.66%, Russell 2000 down 1.09%. The VIX is up 10.25% today, so definitely a shot of fear out there. Bond yields are down about 2%, or 2 basis points. You're not getting an outright collapsing of 10-year bonds, okay? So it's not like we're in full-blown panic recession mode. But Wall Street is definitely pricing in a growing chance of a recession as the government is shut down. So It's definitely not too far gone for this market, but we do want to see the government reopen as soon as possible. Seeing another liquidation in gold and silver. Gold and silver down about 1.5%, and especially, again, cryptos. Cryptos just getting obliterated. Bitcoin down 5.5%, Ethereum down over 6.5%. Oh, and I guess it also doesn't help that Michael Burry, the big short investor, he placed shorts essentially against Palantir and Nvidia. Alex Karp blast the big short investor Michael Burry as batshit crazy for bets against Palantir and Nvidia. That is a pretty damn crazy move. Now, Michael Burry, he did really well during the crash of 2008, the global financial crisis. Ever since then, Burry is not the investor that a lot of people think he is. He's really bad at trying to predict what is coming next, or predict a bubble, or anything like that. Like there's no recent examples of Burry being correct on really anything. Not to mention, Scott Bessent says the U.S. has lots of options to use on tariffs if it loses Supreme Court case. So they're just doubling down on tariffs. And now you can see Transportation Secretary Duffy warns U.S. DOT may need to close some airspace if the government shutdown continues. Like, from a Wall Street perspective, it looks like this thing is falling apart. The house of cards is collapsing. And no signs of ending in the government anytime soon. But I personally think when you're starting to shut down or threaten to shut down air travel, basically traveling in general, there's a lot of pressure being put on Congress right now, and even stocks selling off mixed with that lack of transportation, they're gonna have to just compromise on one side or the other. U.S. House Speaker Johnson says if the Senate passes something, the House will come back. U.S. House Speaker Johnson says we will not do a December continuing resolution. And he says that putting a continuing resolution into January makes sense. So yeah, it is a bit of a shit show sandwich out there today in markets. There's a lot of moving pieces that, really, you got to get the government open and funded, like to even start any kind of a recovery here. But I'm in Aruba right now. Look at these. I collect money anywhere I go. So that's a 10. Arubian TN Foreign, I think is how you say that. That one's pretty cool. This one's 25. And 50. I guess it's like 50 cents on the dollar versus American money. I believe this was like $50 US dollars. Maybe I got ripped off. I don't know. I don't even really care because I collect it. But yeah, it's a shit show sandwich. We do have some earnings today in after hours with AMD, Arista, Supermicro, Beyond Meat, Upstart, Axon, Pinterest. Tomorrow morning you have McDonald's, Cameco, DigitalOcean, Recursion, Novo Nordisk, Humana, Unity. In after hours tomorrow, Robinhood, IONQ, AppLovin, AMC, Dutch Bros, Qualcomm, ARM, Snap, Figma, Elf. Thursday you have AstraZeneca, Datadog, D-Wave. Thursday in after hours, The Trade Desk, Open Door, Archer, Enodata, Airbnb. But again, none of these earnings are going to really save or help the markets at this point. It's all about getting the government opened again. And when I put on my Wall Street glasses here, I would be saying to myself, okay, the economy was weak heading into a government shutdown, and now we have a government shutdown that has lasted for 35 days, that is starting to impact the economy, with some people and firms estimating a negative GDP report for Q2, potentially, because of this. I'm sitting there saying that doesn't look great. I'm going to sell small caps and I'm going to buy big tech if I have to buy anything. And that's a little bit of what is happening today. You definitely do have some mega cap tech stocks that are doing a little bit better. I think that's fair to say. Apple is up 0.67% at least. But it's a broader hit today from the government shutdown. It's been pretty concentrated recently in small caps, in small cap AI, in biopharmas, quantum, more risk on areas. But today it's broadening out a little bit. So yeah, I mean, look at Bitcoin. Geesh, just nasty. Now, we need to get the government reopened. When that happens, I would expect markets to recover and to go through a bit of a rally. Rumor is governments could be opening on Wednesday or Thursday, so we will have to see. But until then, I mean, buckle up. I think a lot of the pain has been priced into small caps until we start to get like actual recession warnings. Maybe you've already priced in a lot of that pain. I don't think we're going to have a recession because I think the economy is a lot more diversified than Wall Street gives it credit for. You really have to see many industries all at once go through a decline to get like a typical recession that we would think of. It just doesn't really happen anymore. We just really don't have recessions in this country anymore because the economy is so diversified. Could a recession happen? Yes, but I think you need more than a government shutdown because inevitably it's going to get solved. And I just don't think it's a recession catalyst unless it were to last like crazy long and, you know, like all the other downfalls of a government shutdown that would start to play out if we were shut down for 2 months, 3 months, 6 months, a year were to actually happen. But again, let's be honest, that's not going to happen. So I think the days are numbered as far as downside is concerned, but who knows? Politics are definitely not politicking right now. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check out that link again down below in the description of today's episode. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.